I'm going to answer or debunk the 10 most common questions, comments, and myths about vehicle deductions in one's business that I get and see across social media. And then stick around for the end where I'll give you tips on how you can utilize a vehicle in your business and maximize those deductions. So let's just dig right in. Any vehicle over 6,000 pounds can be fully written off with Section 179. No. Unfortunately, there are one of three requirements a vehicle must fit within beyond just being over 6,000 pounds and being used more than 50% in their business. And those are that it must be designed to seat 9 or more passengers behind the driver's seat, like a large passenger van essentially, equipped with a cargo area, either open or enclosed with a cap of at least 6 feet in interior length that is not readily accessible from the passenger compartment, like a truck with a 6-foot bed. Or that has an integral enclosure, fully enclosing the driver compartment, and load-carrying device, does not have seating rearward of the driver's seat, and has no body section protruding more than 30 inches ahead of the leading edge of the windshield, like a van with just a driver's seat and a passenger seat, and then cargo space in the back. Those would be the 3 potential vehicles that would be eligible for full expensing with Section 179. As you can see, that is not every vehicle that is simply over 6,000 pounds. As long as I use my more than 6,000 pound vehicle 51% in my business, I can write off the whole thing. No, why would that be a thing? You can't write off anything you don't use 100% in your business 100%. The same rules apply to vehicles. What you're thinking of is, in order to be eligible for Section 179 or bonus appreciation, I must use it more than 50% in my business, but I'm still limited to the business use of that vehicle. Let me give you an example. Let's say I have a truck that is eligible for full expensing with Section 179, and that truck cost $100,000. But I only use that truck 60% of the time for my business. So that would mean that the basis that I can depreciate in my business is 60% of $100,000 or $60,000. So yes, with Section 179, as long as I have enough income, I could fully expense the $60,000 business basis I have, right? Because that's the extent of my business use in my business. But the remaining $40,000 would be personal, because that 40% of the vehicle is used personally. That is how that works. You cannot simply use something 51% of the time and get a 100% deduction. If that were the case, heck, just go buy a bunch of vehicles and use them 51% of the time and then write off the whole thing in your business. That would be a stellar deal. And the IRS is not one to just give out a bunch of stellar deals, trust me. You can use Section 179 to write off a G-Wagon because it's over 6,000 pounds. No. As we previously discussed, there are certain vehicles that are eligible for Section 179. SUVs are not one of them. In fact, SUVs are specifically limited in the amount of Section 179 deduction they can receive. For 2023, that amount is $28,900. In the past, from 2018 to 2022, people have been able to fully depreciate in the first year their SUVs that are over 6,000 pounds. Without even the limitation of income, like with Section 179. But that has been through bonus appreciation, or Section 168K, that is allowed for 100% expensing in the first year, as long as it was used more than 50% for business and was over 6,000 pounds. It didn't have all those other restrictions like Section 179 did. But that said, bonus appreciation is starting to phase out. In 2023, the maximum bonus appreciation is 80%, and then it will be 60% next year, 40%, 20%, down to 0. Now, you can couple the little bit of Section 179 you get on an SUV with bonus depreciation, but it still will not get you to 100% as of 2023 and moving forward. Please do understand that. These are different things, bonus depreciation and Section 179. It's important to understand the distinction, because otherwise you will be confused why Section 179 hasn't gone away, but my ability to deduct an SUV has, at least fully in the first year. If you want to write off a vehicle in your business, all you got to do is just title it in the name of your LLC. No, that's not how anything works. Simply paying for things out of your LLC's bank account or titling things in the name of your LLC does not change the economic substance of the transaction, right? If I buy a vehicle that is all for personal use, but put it in the name of my LLC, it is still a personal use vehicle that is unfortunately titled in the name of my LLC. It's no more deductible than it was before. You see, with the IRS and accounting in general, there's this thing called substance over form. So in terms of defending a deduction, what matters more than the legal form that I put this transaction in, i.e. titling my car in the name of my LLC, the legal form of my LLC, or paying for something out of my business bank account or my business credit card. If those transactions are personal in nature and economic substance, then they are not deductible, even though the legal form is in my business name. In the same way, if I pay for something personally that was for my business, the economic substance was for business, and I can still make an argument that this is deductible for my business, even though the legal form was personal, the economic substance was business. Do you see how that works? That should help clear a lot of things up for you and hopefully help you feel a little bit more sanguine about some of those accidental purchases you made on your personal card rather than your business card. It's okay. You can still count those for your business because substance matters more than form. But please do make sure that your form and substance match, if at all, to have the best defense for anything that you are doing for your business. As long as you have a second car, you don't need to track your business miles. This is unfortunately not true. While it is a good defense for the use of your vehicle in your business to have a second car that you're using personally, especially if you're looking to take 100% or 90% or 80% business use on this vehicle, it is not going to mean you no longer have to track the miles for that business vehicle. And this would be mostly in the case of someone who has two passenger automobiles that they are using as their personal vehicle and their business vehicle, right? The IRS is going to want proof of the business use of this, what could potentially just be a passenger automobile used personally as well. And that comes in the form of a mileage log, which can be done with various apps on the market like MileIQ. Even QuickBooks has the ability to track miles. It's not extremely difficult, and you can even use a 3-month snapshot in order to prove your business use as long as that 3-month snapshot is indicative of the whole year. But understand, the requirement of having a mileage log does not go away because you have a second vehicle. The only time where a mileage log really may not be necessary is if you have a business vehicle that is clearly and obviously not going to be used for personal use, such as like a van that a plumber uses with a bunch of ladders on the side and obvious plumber material inside of it. Any personal use in that vehicle is going to be de minimis, and the IRS knows that that is a work vehicle. Same with like a very large truck or something like that. Those vehicles, yeah, you can get away with not having a mileage log as long as you have a second vehicle. But for those who are like most small business owners, you're going to have a pretty nice vehicle that you're driving around, and then you're going to have a beater car that is your personal car. It's fine. This does not take away your need to track the miles on your business vehicle. Do understand that. I'll just lease my vehicle because then I can write off 100% of its expenses. I don't know why people believe that leased vehicles do not fall under the same rules as everything else in business. No, you still are limited to your business use. And to those who are wondering, how do I calculate my business use? Let's go back to that mileage log. You look at your miles driven for business over the total miles driven for the year on that vehicle. Such as if I drove 6,000 miles for business and 10,000 miles in total for the year, that is 60% business use. So if I'm leasing a vehicle and I use it 60% of the time for my business, and I have a $1,000 a month lease payment, that means I can take $600 of that lease payment as an expense on my business. The other $400, the other 40% of that payment is personal, and I cannot deduct that. Same with all the other expenses that I'm taking on that vehicle, such as gas, insurance, repairs and maintenance, and anything else like registration and such. Those are also going to be limited to the business use I have, which would be 60% in that case. Whatever. I'll just have my business provide me, the employee, an employee benefit of a vehicle, and then I can write out the whole thing regardless of how I drive it. I wish that's how it worked. That would be so dope. But there are specific rules with employers providing employees vehicles. You still have to track your miles, and those miles that are not used for business go to personal use of the vehicle, and any personal use of the vehicle, that value gets added into your W-2 wages. Nope, still not getting around it, having you as the employer provide you, the employee, a vehicle. You can always, I understand, not follow the rules. You can always lie. People can do things wrong. And that's what everyone's defense is, like, well, my boss doesn't do that, or, well, my neighbor Jim doesn't do that. I don't care. I'm just letting you know that's not how that works. If ever audited, they're going to have a problem because they cannot substantiate their deductions, and it's all going to get taken away. So please understand how these things work so you can utilize them correctly. Don't go on the fact that other people do things wrong so I can do things wrong. It's a bad way to live. Don't do that. I film content in and around my car, so now I can write it off in my business. Unfortunately, that's not the way vehicles work when it comes to deducting them in your business. It's all about the miles you actually drive them, right? Going back to business use percentage, it's about the business miles I drive over the total miles I drive. So the only way that I'm going to get business use in my vehicle is not what I'm doing with it while it's idling. It's what I'm doing with it when I'm driving it. The destinations from business destination to business destination are business miles. I need to get as many of those as I can in order to have the highest business use percentage so I can write off as much as I can of that vehicle. The less and less and less of that I have, the less I can deduct in my business. And me just taking photos with it or posting videos with it will not change its business use, not necessarily, because it's really going to be about the miles I drive that vehicle from business destination to business destination. I schedule all my work calls for in the car, so that way, no matter where I drive, I'm getting business miles. I wish that's how it worked. That would be pretty dope. Unfortunately, the IRS has specifically stated that that is not how this works. Basically, the things you're doing in and around the car, your work inside the vehicle while you're driving does not change that trip from being personal to business. Again, all about the destinations. In fact, it's all about going from a business destination to a business destination. So let's make sure this first destination that you are at, the first place you're at, like let's say it's your home, is a business destination. In other words, do I have a home office, a bona fide home office that I can claim here? Great. Now when I go out to another business location, those are business miles. And now for the number one comment or question. Some people do ask this genuinely, but that is this. I put my logo on my vehicle, so now it is a 100% business use vehicle because everywhere I go is advertising for my business. 100% business miles. In the past, yes, this actually did work for a short period of time, but then the IRS specifically has stated that does not work. You putting your logo on your vehicle does not make it all business miles. Again, it all comes back to destination to destination. Putting a logo, that's deductible, the cost to put the logo on there, but everything else is just normal business driving. I'm sorry, guys, that does not work to change your use of the vehicle from personal to business. And I know you might say, well, the IRS is not the end all be all. I can still defend it. You can certainly try to, but if they are stating something specifically, then that means that is the defense that they are going with, and they might have won a number of court cases on this basis, and thus they're letting you know straight up, this will not work. So if you're going to go in with a defense that they're already telling you they will not take, then you have a hefty legal battle ahead of you that I don't encourage you to go down for something as simple as make sure you just have as much business destination to business destination miles as you can get. Just make sure you do that. Don't try and cheat the system with something I already said doesn't work. But here are some tips on how you might be able to deduct a vehicle in your business and how to maximize that deduction. So in order to utilize a vehicle in your business, make sure that number one, you actually have a use for a vehicle. If you are a business that doesn't require you to really drive anywhere, then trying to deduct a vehicle in your business is going to mean that you're either going to buy something that's going to sit in your driveway until you have that one random need throughout the week to drive somewhere for your business and like go get supplies or something, or you're going to have so little business use in it that it's going to be mostly personal and not really deductible at all. And you're just going to take some of those miles during the year with the standard mileage rate, which is fine. Keep track of your miles for that purpose. But understand, not every business requires a vehicle. There are a lot of home-based businesses that don't really need to drive anywhere. So trying to deduct a vehicle in it is really going to cause more of a headache for you than it's really even worth. And then step number two, make sure you're tracking your miles. I know this sounds like such a cumbersome thing to do and no one's doing this. Trust me, people are doing this. Those who want to deduct their vehicle in their business track their business miles. It's just what they do. If they have a good accountant, they're making sure that they're staying up on that. Look, I work with a ton of realtors. This is pretty much step number one. This is their biggest deduction of the year. They're going to make sure they have a good defense for that deduction. They track their miles. There are applications out there. Like I mentioned before, MileIQ is a great one that a lot of people use. I believe you get in your car and you can swipe left or right for whether this is personal or business. You can even go back. It'll still track all the miles that you've driven saying, I don't know what this was. And you can tell it whether it was business or personal. And then at the end of the year, you're going to have a nice log of all those miles with destination to destination. It's really nice. There are ways to make your life easy because we live in the future and we have a lot of applications to help us with that. And then step number three, let's get those business miles as high as we can during the year, which means don't use this one vehicle you're using for business for those trips to the grocery store, for any long trips with your family. Use your other vehicle. If you have a spouse, use their vehicle for those trips. And make sure that you have a business destination that you can always start from, i.e. your home. If you can create a bona fide home office, then you can use this as your starting business destination. That means wherever you go from your home, that's office number one, to another business destination, that is going to be business miles. Otherwise, your business miles do not start getting tracked until you reach business destination number one. So if you do not have a bona fide home office, a home office that is specifically set apart to be used for business and is not where you do the majority of your administrative work for your business, then when you drive from your home to your first business destination of the day, those are commuting miles, which are not business miles. They will not count towards that business use percentage. They're going to be personal. Then anywhere you drive from that one business destination you got to the next are going to be business miles. So if we can reverse that a little bit and say, I have a bona fide home office, and I'm going to drive from here to another office, my other office, whatever it might be, then those are business miles. And then anywhere you drive from there, business miles. That is going to be the thing that allows you to get the most business miles you can, increasing the amount of deduction you can get for your vehicle. This is definitely something you're going to want to talk about with your accountant to make sure you have the proper defense for your home office being your primary office for your business. That way, everywhere you drive from there for business is going to result in business miles for your vehicle. Be sure to let me know in the comments if you have any questions yourself on vehicle deductions, or if you've seen any myths across the internet that you'd like me to debunk. And be sure to like, subscribe, and hit that notification bell. If you have any videos that you've seen on TikTok or Instagram, be sure to tag me in those as well. Thanks so much for watching. I'll see you on the next video.